Hi everyone, it's Ankit. Welcome to a brand new video. Today we're going to talk about stocks, real estate, and crypto. If you're excited about today's video, then drop a like. It really does help out and support everything I'm doing. Leave a comment with anything that you find interesting, or if you want to have a discussion about any of these topics today in the comments below and why. Subscribe if you're new for weekly videos on investing and about life. Let's try to hit 6,000 subscribers. With all that out of the way, let's get into today's video about real estate and the stock market and crypto. Three stocks Wall Street thinks will soar 37% to 64% within the next 12 months. So let's start. Skills is number one on the list. Skills continues to deliver sizzling growth. The company reported its 22nd consecutive quarter of revenue in the second quarter. Sales soared 52% year over year to $89.5 million. And you know who we have next? SoFi. I love this company. I love what they do. I currently use SoFi. So the average analyst price target for SoFi reflects a 37 premium to the current price of the stock. Initiating coverage this week with a target 47% above the current share. Next what we have is Trupan. TRUP stands out as another stock that Wall Street thinks will take off in the next 12 months. Revenue jumped 43% year over year in Q2. Its total enrolled pets increased 38% to more than 1 million. In the US, only around 1% of all cats and dogs are covered by medical insurance. The number is a little higher in Canada, but it is still much lower than in European countries. And number 3 on the list is Trupanion. The price target is believed to be nearly 49% above the current share price. Its revenue jumped 43% year over year in Q2. Its total enrolled pets increased 38% to more than 1 million. And it's currently also launching new products and services. The company also plans to introduce a pet food subscription plan under LancePath brand. In the US, only 1% of all cats and dogs are covered by medical insurance. The number is a little higher in Canada, but still much lower than in European countries. And here's some news on FTX for those of you that have the app just like me. I have a video on it, what FTX is if you don't know. FTX moves headquarters from Hong Kong to the Bahamas. The move comes as regulators around the world are stepping up their tightness and what they can do and what they can't do for cryptocurrencies. China cracks down harder on cryptocurrency, banning all transactions. Cryptocurrencies illegal and issuing a nationwide ban on cryptocurrency mining. The power-hungry process in which the vast computer networks compete for newly created crypto tokens, and Bitcoin being the world's largest cryptocurrency, dropped 7% after the news came out about the ban.
What about the US? Are you prepared for a future with a central bank digital currency? To help answer this question, we're going to bring in Emily Parker, CoinDesk Global Macro Editor and CoinDesk TV anchor. Thank you for coming back here. And let's start out with this. How close are we? We hear Chairman Powell, we hear Treasury Secretary Yellen talking about this, a little bit of jawboning there, but what's a realistic timetable?
There is no realistic timetable. We're actually not that close at all. The US is still in the research phase, so they haven't actually decided if or when they will issue a digital dollar. So on the one hand, some caution is warranted. You want to get this right. But on the other hand, you have other countries racing ahead, namely China. At present, you have 81 countries exploring the launch of a digital currency. The US is still very much in the research phase, so they have not committed to doing this.
Emily, I mean, when you talk about the potential timeline here, of course, a lot of people looking to the Olympics next year is the big unveil, if you will, for China's central bank digital currency, at least on a global level. How much of that you think determines the timeline with which the U.S. moves?
It seems that the US has made very clear that they don't want China to dictate the timeline of the issuance of a digital dollar. And to a certain degree, that's merited because the US wants to get a digital dollar right if it's going to do it at all. It wants to make sure that it has privacy protections, for example. So I don't get the sense that the US is particularly concerned about China's speed. They've actually said that they want to make sure that they do it correctly, but it's time is ticking. And I think the issue is that there are two potential models for central bank digital currency. One is based on government surveillance, in which the government can basically see every transaction. The other has privacy protections embedded in its design. And I think the US has a choice to shape the future of digital money, and hopefully it will choose to go the privacy route.
Before we go, we were talking in the break here about the infrastructure bill, which has a cryptocurrency portion, has to do with tax reporting, kind of onerous, and now it's in the House. Where could this proceed, and what's the worst case scenario here, and what's the best?
So if you ask crypto advocates, the worst case scenario is that the bill continues in its current form, which contains language that many crypto advocates believe is very unfriendly to the cryptocurrency industry, specifically language that makes it difficult for certain actors like miners or validators or software developers to comply with US tax regulations. That's where we are now. It is proceeding to the House, but we don't know yet if the language is going to be changed.
So why China finally decided to ban Bitcoin? I'm curious on if you know the answer without looking at Google or searching it on Google. Can you let me know in the comments below why you think they banned Bitcoin? So let's get right into why they banned it. The reason for the ban was China has in the past been a popular site for mining due to low electricity costs in areas like Inner Mongolia, but in countries is currently experiencing an energy crisis and trying to become carbon neutral by 2050, a goal that cryptocurrency is making harder to meet. Well, I still think that's like a long stretch with all the pollution and everything that's in China right now. Well, I do think the EV market's helping them with like Tesla being there, so that's a good opportunity for Tesla, and hopefully that can help with the carbon neutral goal that they have in mind. And in 2019, China was home to 75% of the world's Bitcoin energy consumption. That number has dropped 46% in spring 2021, and will likely drop even more sharply with the new restrictions announced on Friday. So we'll see what happens. Costco, Nike, and FedEx are warning there's more inflation set to hit consumers as holiday season approaches. Get ready for that inflation to hit, and what impact it's going to have on this holiday season when we get near Thanksgiving and Christmas, which is just a couple months away. Getting ready for the holidays. The timing, though, it's not good, but, it is what it is, and we just have to deal with it. Number one, there's got to be a flexible with their supply chain, all these costs are going to hit the operating profits. FedEx this week announced that it will hike shipping rates 5.9% for domestic services and 7.9% for other offerings. And then we have a video on here. Powell on inflation expectations anchored around 2%, which I believe it's wrong and he's lying, and it's way higher than 2%. And number 5, Costco brings purchase limits back on toilet paper and other items. So now there'll be a limit on certain items in the store when you're trying to purchase it. 5 things to know before the stock market opens on Friday. 1. Dow is set to drop as it tries to hold its weekly turnaround. So one day after another, strong rally pushed the Dow and the S&P and the Nasdaq into positive territory this week. And here's the Dow volatility. Number 2, we have the Bitcoin sinks as China intensifies crackdown on cryptocurrency. Not only did I see Bitcoin sink or go down, I saw a lot of the other cryptocurrencies, if not all of them, slowly going down. And if it sinks enough, I might even buy more. So we'll see what happens. And then we have bond yields rise as China Evergrande contagion fears fade. So they had that deadline of yesterday, which is Thursday, to pay back that 80 something million dollar loan. Here it is. Evergrande has not said whether it will make an $83 million payment on the US dollar dominated bond that was due Thursday. And number 4, we have the CDC chief overrules panel and clears Pfizer booster for frontline workers. And then we have number 5. Are U.S. housing prices unsustainable? Is the red hot U.S. housing market starting to lose some of its sizzle? While home prices tend to trend it up over the long term, it is important to note that they can't escape business cycle forces. Here is the chart 1 of the Global Real Home Price Index, RHPA. Here's the first chart, the Global Real Home Price Index, RHPI. The key difference between the blank recession and the Great Depression or Great Recession. The key difference between the COVID recession and the Great Recession. The U.S. housing experienced a profound and drawn-out contraction that was more severe than impacting on GDP. Yearly changes in home prices did not turn positive until mid-2012, several years after the recession. Chart 2, U.S. Home Price Index, HPI, versus the gross domestic GDP. Considering the speed and magnitude with which the price increase, it's not surprising housing activity has moderated since the start of the year. Nonetheless, recent trends suggest that the home prices may have reached a level restrictive to potential buyers, particularly first-timers, raising the questions, are U.S. housing prices unsustainable? So here is chart 6, U.S. household debt to GDP. It's not just about absolute debt level, but it is crucially the ability to service the debt. For this reason, interest rates and their influence on the debt to service ratio are the most important. The DSR measures the debt servicing costs related to disposable income. The higher the DSR, the more burdensome the debt load is for the average household. And here's chart 7, U.S. debt service ratio percentage. It's on the decline. The point is that low mortgage rates are supporting affordability. Moreover, as unsustainable as home prices may seem, the Canadian experience suggests that home housing can ascend further under the right circumstances. The last chart we have is chart 8. The housing market versus the equity market. Home prices versus stock prices. A lackluster U.S. equity market recover after the technology bubble deflated, coupled with an accelerating housing market benefiting from lowered interest rates, contributed to the U.S. housing outpaced the U.S. equities in the years following the dot-com bust. So it's clear that we're in unusual times, and it's clear the housing market has behaved in ways that are not typical during a recession or whatever else that might be going on. But here's 2 key factors that may continue to support housing. The Federal Reserve's influence on mortgage rates, and the Fed is in no rush to raise the rates. Therefore, the low mortgage rates support affordability. And number 2, housing inventory is historically tight. Limited supply with elevated demand also supports prices. So we'll see if the demand continues and we'll see what the Fed has in store for the rates. Cutting federal unemployment benefits early has not led to a significant greater job growth, as some would expect. I didn't expect it either, Why would people want to go back to work after they've been getting $300 weekly benefits? Or even more, depending on where people live.